AJ Bell's Investment Director, and I'm here to discuss the subject of Exchange Traded Products, ETPs, and how investors can use them to build a balanced portfolio. With me is Josh Tiwana of ETF Securities, one of Europe's leading providers of ETPs, and we're going to look at how you can use these instruments to track, target a specific industry, sector or commodity rather than say a broad stock market index. And in this case, we're going to talk about oil. Now, it's obviously been a fabulously contentious issue, dominating a lot of markets' attentions. It's collapsed and rebounded. So if an investor's looking to get involved in oil, Josh, are there any ETPs out there that means they can target this particular commodity?
Well, there are a wide range of oil ETPs available to the investor. For an investor wishing to express a simple directional view on oil, there are long and short oil ETPs.
Which means they can get exposure to the upside or to the downside.
Exactly. For a long oil ETP, you profit when prices go up, and for a short oil ETP, you profit when prices go down. Alternatively, for investors that have a strong short-term tactical view on oil prices, they're leveraged oil ETPs.
So they maximise the return that's on offer, the movement, the underlying
movement. A leveraged ETP would provide, for example, 2 times the daily price move in crude oil prices.
Perfect.
So while an investor can gain greater exposure from a lower amount of capital invested, it's also more subject to volatility. For UK investors, what's particularly important are currency hedged ETPs, whereby an investor that invests in commodities which are typically denominated in the US dollar, they are inadvertently subject to fluctuations in the dollar-sterling exchange rate. Now, a currency hedged ETP allows an investor to gain exposure to movements in the crude oil price while mitigating the currency risks that are inherent in commodity investing.
Now, you mentioned the currency issue was one issue that investors need to be aware of, and we've discussed a little bit about costs. Mm-hmm. How easy are ETPs on oil to trade? What's the underlying liquidity, if you'll pardon the expression? And what do we need to think about stamp and things like that as well, for example?
Well, at ETF Securities, our product range are not exposed to stamp duty, not liable. However, when it comes to liquidity, it is dependent on the commodity. Now, oil is one of the most frequently traded commodities. Therefore, oil ETC, its liquidity is a function of the liquidity of the underlying market. Now, as oil is a very liquid market, this supports liquidity in the oil ETC market. So it's a very liquid product.
So touch wood, it should be pretty, easy to
exactly.
trade as and when an investor needs to do so.
Exactly.
And just one final point, oil ETPs, are they ISA and SIP eligible?
Oil ETPs are ISA and SIP eligible, particularly the ones at ETF Securities. All our ETCs are ISA and SIP eligible, apart from our GBS product, which is a gold bullion security.
A gold bullion security, which we may discuss in a separate video. Josh, thank you ever so much for your time, appreciate it. And thank you for your time. We hope that was informative, and please do come back to look at some of the other videos.